Welcome to etvFutures.com. It's Wednesday, February 13th. I'm Remy Hickey with your Commodities Recap. In energy, NYMEX crude oil futures ended higher on the day. The U.S. retail sales data release and the signing of the economic stimulus package lifted market sentiment. There are also geopolitical factors playing out, with Venezuela's oil company saying it will halt sales of crude oil to ExxonMobil. March crude oil gained 49 cents on the day to end at $93.27 a barrel on the NYMEX. Earlier today, the EIA reported that crude oil supplies rose by 1.1 million barrels in the latest week. This was a smaller than expected increase in inventories. Meanwhile, the EIA also reported that distillates fell by 100,000 barrels last week, while gasoline rose by 1.7 million barrels. At the NYMEX close, March heating oil futures added 2.45 cents to end at $2.6156 a gallon. March gasoline futures rose 2.19 cents to end at $2.3899 a gallon. Meanwhile, March nat gas futures fell 6.6 cents on the day, closing at $8.37 per million BTU. EIA nat gas inventory data will be released tomorrow morning at 10:30 a.m. Eastern Time. Over in the metals complex, gold futures closed out the session lower, while platinum futures skyrocketed into record territory. April gold ended down by 90 cents at $910.20 an ounce. Earlier, the front month gold contract hit an intraday low of $899.50 an ounce. Today, we're joined by John Kilduff from MF Global. He'll recap the energy session today and also give us his near-term forecast.
Well, Remy, today the market continues to be propped up from the ongoing situation over ExxonMobil's seizure, freezing of up to over $15 billion worth of Venezuelan assets. Just moments ago, actually, the U.S. part of this action, the judge confirmed the freezing of $315 million of the seizure, and we expect the other U.K. judge and Netherlands judges to follow similarly. There is going to be a rally, and Chavez is going to be speaking to the Venezuelan parliament tomorrow, so the rhetoric should really light up now that these judgments are being confirmed, and should add to the anxiety and potentially even higher prices for crude oil, especially as a result of all this, simply because Chavez is capable of just about anything. And I think what most of us are worried about is even a direction for Citgo to run at reduced rates in terms of their refining capacity. Certainly all avenues have to be expected to be explored by Chavez over this situation. But beyond that, we did get a mildly supportive inventory report from the government today. Crude oil inventories built much less than expected. Really, half of the expectations were met. And additionally, we saw an uptick in gasoline demand. We climbed back over the 9 million barrel per day mark. Also, in terms of the continued back and forth over our economic situation, retail sales posted a better than expected gain for the month. So that also contributed to the uptick in prices. Tomorrow's natural gas inventory will be closely watched as well. As we are looking for 130 BCF withdrawal on that number. It's on the higher end of expectations, but to the extent we get another triple-digit pull from storage, we've seen for the past several weeks now substantial withdrawal amounts based upon the weather that's been enveloping the country. So while natural gas prices were off today, we're looking for them to rebound, although we do believe we're in the last throes of the overall rally. So energy prices continue to maintain their firmness and head higher despite the overall poor economic conditions, but we've got plenty of geopolitical worry out there in terms of Venezuela and Nigeria in particular. So the bullish sentiment is maintaining itself. Also, technically, we're seeing prices potentially moving higher.
That was John Kilduff from MF Global with his commodities commentary. I'm Remy Hockey. Join us later for PM Exchange right here on etvFutures.com.